Welcome back to Investing Talk Podcast.
Today, we're looking at NioCorp developments. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we talk about NioCorp developments, we are definitely not talking about a tech stock or some big industrial name you know well.
No, this is different.
It's really a pure play bet on critical infrastructure and these strategic minerals. The stakes are, frankly, pretty high, commercially and geopolitically, too.
And that geopolitical angle, that strategic need, that's really what makes NioCorp so interesting, I think. The asset they're building, this Elk Creek project out in Nebraska, it's just enormous.
It really is. It's positioned to be one of North America's largest sources for three really key strategic metals. We're talking niobium, scandium, and titanium.
Okay, and it's crucial, right, for listeners to get why these three metals together create such a strong competitive position, a moat.
Exactly. It's not just a random list. These are materials with very specific, very critical uses. And the current supply chains, dominated by countries that aren't always, let's say, friendly.
Let's break that down a bit. Titanium. People sort of know that one. High-performance stuff, aerospace, defense.
Right.
But niobium and scandium, why should, an investor really care about those two?
Well, niobium is critical for making high-strength, low-alloy steel. Think pipelines, bridges, advanced infrastructure. Adding just a tiny bit makes steel way stronger, more efficient.
Okay.
And scandium. That's essential for aerospace alloys. It makes aluminum compounds lighter and stronger, super important for high-performance planes and maybe even, next-gen EV bodies where every ounce counts.
Ah, okay. So if the U.S. and allies are serious about, reshoring supply chains, getting away from relying on China or Russia for this stuff.
NioCorp steps right into that gap.
Yeah, it seems like it.
Yeah.
So it's not just another mining project. It feels almost like a national security interest?
That's a good way to put it. And when you look around, especially for niobium and scandium, there are basically no other real North American competitors with projects this advanced. That gives NioCorp a really clear moat, as the project moves forward.
And that ties right into the macro picture, the policy tailwinds everyone talks about.
Yeah.
What's the actual potential impact of this U.S. push for critical mineral supply chains?
The impact. Potentially huge financial backing. If Elk Creek gets that critical minerals designation, which seems pretty likely or at least widely expected,
right,
that could open doors to DoD contracts, faster permitting, maybe even massive federal loan guarantees. That kind of backing could seriously de-risk the project financially, way beyond what a typical junior miner could get.
That upside potential, that sort of explains why analysts are so bullish,
right,
despite the current financials. The consensus is strong buy.
It does.
But, okay, here's the tough part. How do you square that optimism with the fact that, the company makes zero revenue right now?
That is the absolute key challenge here. You just can't analyze NioCorp using standard profit metrics. That strong buy. It's totally conditional on them actually executing the project and eventually hitting commercial scale.
Okay, let's dig into that caution then. The fundamentals, or maybe the lack of them for now, it's pre-revenue, heavy development stage.
Yeah.
What do the numbers actually look like? What does that tell us about the risk?
Well, the numbers reflect exactly that. Heavy spending. For the trailing 12 months, the TTM net income is negative, about $16.30 million negative.
Okay.
And earnings per share, also TTM, that's negative $0.36.
And with negative earnings, obviously, you're not getting a PE ratio, no forward PE either. That negative $16 million, that's basically just the cost of keeping the lights on and the development moving forward.
Exactly. That's the cash burn. And you have to expect that burn to continue until Elk Creek is actually producing and selling material.
So this really defines NioCorp as, speculative, high risk, potentially high reward.
Absolutely. The question isn't about current profit. It's about whether their balance sheet is strong enough to handle the spending needed to finish construction.
Which brings us to the financing news, which was pretty significant recently. That kind of changes how you might look at that cash burn.
It does. Their whole balance sheet depends on raising capital for the project, and they just showed they can do it, and on a pretty large scale.
Yeah, what was fascinating was the market's appetite for funding this, long-term infrastructure idea.
Right. Back in October 2025, NioCorp pulled off a big registered direct offering, raised $150.2 million.
Wow.
And importantly, they sold those shares at $9.34 each. That's a key price point. It shows pretty strong investor confidence, and that cash is earmarked specifically for pushing Elk Creek construction forward.
And raising $150 million at 9.324 cents.
Mm.
When the stock is currently trading below that,
Hmm.
that says something, doesn't it?
It suggests the institutions buying in believe the long-term value is way higher than the current price, but, they're accepting that near-term risk. But we absolutely have to talk about execution risk here. Building a mine and a complex chemical processing plant, that takes massive capital expenditure, CapEx. Right. If costs blow out or permits get delayed, there's always the risk they'll need more money, meaning more shares, potentially diluting existing holders. That $150 million gives them a good runway, a strong one, but how they spend it, that's critical now. Accountability.
Okay, so fundamentals are messy based on the future. Let's look at the technicals. What's the chart telling us about momentum, given all this speculation and financing?
Well, it's telling us it's volatile, which, is pretty typical for these development stage mining stocks.
Yeah, I bet.
The recent price, late October 2025, was around $7.31, but look at the 52-week range. $1.27 low, $12.58 high. That's huge. Volatility over 20%. Not for the faint of heart.
Definitely need a strong stomach.
Yeah.
But beneath that surface noise, the longer-term technical signals actually look pretty encouraging for the bulls, don't they?
They really do. Despite the daily swings, the stock's holding above key moving averages. That signals pretty solid intermediate and long-term momentum.
Okay.
It's currently trading above its 50-day simple moving average, the SMA, which is around $6.50. And crucially, it's way above the long-term 200-day SMA, down at $3.52.
In the gap between those two, the 50-day being so far above the 200-day, that's significant, right? It suggests this isn't just a quick pop, but maybe a more structural uptrend.
Exactly. The technical structure seems to confirm the market's longer-term positive view on this project, validating that potential.
Any other signals?
Yeah. We also have a positive 3-month MACD signal active. That's the moving average convergence divergence. It adds a bit more weight to the idea that, accumulation might be happening.
And what about momentum indicators like RSI? Is it looking overgot?
Actually, no, that's another interesting point. The 14-day relative strength index, the RSI, is sitting right around 46.29, basically neutral.
So not too hot, not too cold.
Right. RSI usually signals overbought above 70, oversold below 30. So 46 is kind of the sweet spot. It means the stock isn't stretched, technically.
Wait.
It means there's potentially room for it to run higher if good news hits without immediately triggering technical selling pressure. The chart looks kind of coiled, ready for a move on fundamental news.
Okay, that leads us perfectly into the next critical part, catalysts. What are the key things investors, both short-term traders and long-term holders, should be watching for right now, like next 3 months?
The single biggest thing on the immediate horizon is the earnings report. November 12, 2025.
Right, but not for earnings numbers per se.
Exactly. Since they just raised $150 million, this report is all about accountability and execution. Investors will be laser-focused on seeing measurable progress at Elk Creek. They'll want transparency on how that new capital is being spent against the construction timeline. That cash deployment is the #1 metric short-term.
Makes sense. What else?
Well, beyond the company itself, you've got market structure stuff. Around the end of November, maybe November 29th, 2025, you have the big index and ETF rebalancing periods.
Ah, okay, so potential inclusion.
Yeah, if NioCorp gets added to some major indices or maybe some specific critical minerals ETFs, that could trigger significant sort of automatic buying from institutions. That often gives a stock a nice short-term boost.
And then there's the speculative angle we touched on earlier, the regulatory side.
Right, the market chatter, still unconfirmed, about that critical minerals designation from the government.
That feels like the big one.
It really is the ultimate potential upside driver right now. If that gets confirmed, wow, it wouldn't just be a headline. It could fundamentally shift the company's entire risk profile.
How so?
It could potentially unlock government debt financing, maybe loan guarantees. That would drastically cut their cost of capital and really validate NioCorp's strategic role. That news, if it lands, would likely cause a substantial immediate jump in the stock's perceived value.
Okay, looking a bit further out then, beyond the next few months, what are the long-term catalysts?
Long term, it's crystal clear. actually starting production, shifting from development to revenue generation.
That first shipment.
That first shipment of niobium or scandium or titanium, that will be a massive milestone. It changes the story from an idea with a potential mine to an actual operating supplier of strategic stuff.
And tied into that, you often hear industry rumors about partnerships, right?
Yes, persistent rumors. If they could land a major strategic partner, like a big auto company, maybe an EV maker or a battery OEM.
That would be huge validation.
Totally. A partner like that might sign long-term supply agreements that provide stable, contracted revenue, de-risking the whole project significantly and locking in Elk Creek's place in the supply chain.
Okay, let's try and pull all this together. It's definitely high stakes, massive potential upside, tied to this unique resource meeting a clear geopolitical need, but also, huge risks.
Yep, the classic pre-revenue mining project risks.
So what's the final thesis for someone considering this stock?
You have to ground it in those core risks. Cash burn is ongoing. That's a given until production. Execution risk is high delays in construction, permitting issues. They're always possible.
And commodity price swings too, right?
Yeah.
Resource sector volatility.
Absolutely. And the stock's own volatility. Losing 20% in a bad quarter is, entirely possible here.
But balancing that against the moat, the potential government support, the recent funding, the clear catalysts.
Yeah.
The analysis we looked at suggests NioCorp could be attractive on two different timelines.
Exactly. First, maybe for short-term trading. Playing those Q4 2025 catalysts, the November earnings update on spending, and any whiff of that regulatory news, that's for someone looking for a potential pop based on near-term progress.
And
Second, as a compelling long-term investment. That thesis is really anchored in Elk Creek's unique competitive position in strategic metals and the potential for multi-year gains as the project hopefully comes online and meets that undeniable geopolitical demand.
So overall,
the overall rating, balancing that pretty extraordinary upside against the very real speculative risks, comes out as bullish, an 8.5 out of 10. The opportunity looks really unique for North American strategic metals, but you absolutely have to be comfortable betting on their execution skills.
so the investment decision here isn't about today's profit or even next year's. It's about betting on effective milestone delivery and the geopolitical necessity of establishing robust North American critical resource supply chains. The real question for you, the investor, is whether you are betting on the company to manage complex engineering or betting against the current geopolitical dominance of Russia and China in these key materials, or watching the execution of that $150 million raise over the next quarter like a hawk.